Warning. The following may contain concepts, ideas, and/or reflections unique in nature and not yet approved by government and/or corporate entities. This content is for entertainment purposes only and is not intended to stimulate further reflection or to perpetuate additional discourse beyond the scope already outlined by institutional curriculum.
I hate having to do it a second time. All right. Greed, for lack of a better word, is good. Today, everyone, we're talking about banking finance in America. Let's
What a
cue
fun
the
topic.
intro. Yeah. All right, so today we're going to be covering the customer banks, investment banks, the large investment firms, and how it all relates to global economy and the national debt and all that. But don't be intimidated. It's actually fairly simple because there is the front end of things where everything is supposed to appear incredibly complex. But then there's the back end of things where really the shuffling of money is pretty simple. And so I think it can be broken down into a very element system here. So one of the first things I think we should cover is understanding how mutually invested these big banks and big entities are. Right? Because this is an important component to understanding how they operate. Each bank owns a significant portion of their competitors. This mutual investment that happens amongst all banks in America uniformly means that they really are operating as a single bank, a single private bank. And appreciating and looking at it as that entity of one single bank will help to disambiguate the situation, because then you can see that their finances are all linked together, their profit share is all linked together, their operations are all linked together. So we don't need to be thinking of a capitalistic, competitive, one bank's trying to wrangle customers from another, et cetera, et cetera. And so you can research for yourself, but if you look up, like, most of the banks are publicly traded. Only Vanguard is a private one, so we don't really know too much about their financials or their shareholder breakdown. But considering that Vanguard is invested in each one of the major banks that we'll talk about, it's safe to assume that they're essentially a part of that ecosystem,
Including the 5 major Canadian banks, by the way. Vanguard seems to have gotten himself in there.
Well, everyone should know that we live in a globally interconnected world. I mean, so yeah, you got the Saudi royal family that hold sway in all these banking institutions as well. So I mean, but we're just, for simplicity's sake, we're going to be focused on the American banking system because of its size and scope.
Well, the Canadian banks. When I looked up on Yahoo Finance, probably about 2 years ago, it seemed like Vanguard wasn't even a part of the shareholder breakdown. It was, so you got the 5 major banks, Royal Bank, Scotia, TD, Bank of Montreal, and I think, did I say the Royal Bank? Yeah, I think I did. Anyways, when I looked at the breakdown about 2 years ago, it seemed like each bank had 20% stake in all the other 4 banks. So they were basically operating as a single entity.
Yeah, I mean, monopoly is a much more effective tool than true diversity and competition. If you have true competition for a corporation, it eats into their profits. So definitely it's an incentive where the client is the one that you're trying to milk for everything they got.
So it's kind of like what John D. Rockefeller said about competition is sin. They
Right.
took that to be the template of the way these multinational corporations now work and
Right.
operate.
So there's two terms that a layman might not be familiar with. Keeping in mind, I'm not, I'm not a professional. I'm not an economist, but I have a
You've
brain
taken
with
an
some
interest.
neurons. And so, okay, so the first term, we all know like revenues and stuff. So that's just a separate topic. Assets under management is things that are, they're funds that are managed by the bank, by a employee for the bank. Typically, they're actively investing. This will be in the form of like mutual funds or even just large investors who have a broker who is doing their investments and diversification for him. So assets under management, actively investing in stock and whatever else. Assets under custody is slightly different. And the custody part is basically saying this person is entitled to this money, but they aren't in active control of it as of yet whenever they come of age. Now, in the case of our modern world, the vast majority of this means basically pension funds, because the vast majority of the dollar value that we're looking at is all bound up in pension funds. It's what you technically own, but until you reach that pension years, you can't withdraw it, you can't access it, you can't control where it's going and how it's used and what type of investments. Basically, you have a private pension plan. They're managing that, quote unquote, for you. And what they do with that money, you really have maybe a cursory knowledge of, but you're not really going to know essentially how they're using that money or have any control of it.
Well, and
that is assets under custody. So that's the two terminologies: assets under management, actively investing for people, mutual funds, et cetera, and then assets under custody, which basically means pension funds. Private pension funds.
And if people think that, well, it doesn't, I'm not really that concerned. I'm in my 20s, or I'm just getting into the job market, if there is actually a market out there for me to jump into. You're going to be, you're going to have a pension taken off of your paycheck. So this is going to start really basically as you begin in the workforce.
Well, I was thinking of a way of a way of expressing essentially, if you really look at private pension plans as being like a private tax, it's a private corporation which is taxing you kind of similar to how the government would, but with no real responsibility to you, or very little in a sense.
And the government's allowing this to happen.
Okay, so let's just break into the numbers here. I didn't want to, like, I'll probably post this one, which is a screenshot just of BNY Mellon Bank of New York Mellon, just because they're they're the largest custodial banks in the world. And I just want people to see that this is where the numbers are coming from. But I'm not doing that for every single bank. I just to show you that 52.1 trillion in assets under custody or administration, and then 2.1 trillion in assets under management. So if you remember what those mean. All right. So let's just break down the raw numbers. And I'll reiterate, it's important to look at these banks as one cohesive unit. In some cases, you're going to see more of these banks have more assets under custody. Some of them will have more assets under management. Some of them will have higher revenue streams, and others will have lower revenue streams. For example, the Bank of New York Mellon has $2.1 trillion in assets under custody. and 2.1 trillion in assets under management. But its annual revenue per year is $18.6 billion. If we compare that to like Bank of America, they have no assets under custody. They only have 1.88 trillion in assets under management, but their revenue stream is 102 billion. And even if we look at an investment bank like Goldman Sachs, we'll still see they have 38 trillion of assets under custody. They have 3.2 trillion of assets under management, and they're making $53.5 billion. So Goldman Sachs is structured fairly similarly in a sense to Bank of New York, Mellon, but they're obviously making a lot more profit each year. It's important to recognize that because they're mutually invested in one another, which means the profits and the finances are moving around. They're all having access to this capital in either a primary fashion or a secondary fashion. Now, instead of going through each one, Bank of New York, State Street, JP Morgan, Citigroup, Northern Trust, Vanguard, BlackRock, Goldman Sachs, Bank of America, and Wells Fargo, let's just take what their aggregated score is all together and look at that because, like I said, they're basically one bank. So if we take all of their revenue and we add it all together, we get $553 billion per year. We have $41 trillion of assets under management actively being traded and invested for mutual funds or for actual investors or for ETFs, which are kind of like bundled. They're like their secondary class mutual fund or whatever. You know, there's all kinds of crap that these people will bundle things and give it a special name so that most people don't really know what the hell it is or how it relates to themselves. Because transparency is not a part of your fiduciary obligations. And that was a bit of a joke.
I didn't see that coming.
Now, assets under custody is $209 trillion. Now, okay, so these numbers may not really make a whole lot of sense. I mean, you know, it's like, okay, 200 billion, 100 billion, 200 trillion. What does that really mean? So let's just compare now to, because the question is, most times they're not like disclosing how they're moving your money around, even though they say we have a fiscal obligation to our clients. If the client goes, well, how are you spending my money, jackass? They'll go, through diversification projects, and you'll get a bunch of word salad.
No, proprietary secret.
Right? We got algorithms and experts that are analyzing market trends.
Just beyond your ability to comprehend.
So this is a good example of not having really much to go off of for facts, but just doing a little bit of critical thinking and deductive reasoning. And you're going to start to see how money can be spent, where it's coming from, just from the actual raw numbers. You look at the raw numbers and you go, well, okay, I don't know. I mean, what specifics can you get from that? Just a side note, I did go through a prospectus for the Bank of Mellon because I wanted to see how they were allocating all of the funds under custody. But in like the 250-page long private shareholder revenue, like quarterly report. Right. No, they never refer to what they're doing with all that $50 trillion of assets under custody. They never mention it once. So, okay, so that's an interesting point. Now, where are they putting this money? And if we look at the size, so let's just say the assets under management, mutual funds, they're investing in the stock market and everything like that. Well, okay, so that these top 10 banks have 41 trillion of assets under management. Well, let's just take a look at what the New York Stock Exchange value is. Now, it says the New York Stock Exchange is valued at $28 trillion.
So surely they could.
So in other words, to break it down, okay, they are managing money by investing, and there's more money than there is stock on the New York Stock Exchange, the largest stock exchange on the planet, which means that their investments would have to go into private holdings and maybe other stock exchanges, maybe European Stock Exchange or the Hong Kong Stock Exchange or something like that, just to have enough latitude with the amount of money that they're managing. Because as it is, they could just buy all the stock that you think of, like this inflated stock of Apple stock and Google and Microsoft. Yeah, all of that combined is still only worth $28 trillion, and they're managing $41 trillion. Right? So you can automatically see that the amount of money that they're moving around is like most of the money in the this is most of commerce is going through 10 banks in the US. This is just the US. This is not like the top banks in the world, but most of the finance hub is in America. So that's what we get. So if the New York Stock Exchange is valued at that, what else could these people be using for the custodial side? Because that's just the assets actively under management for investment for their clients. So where are these assets under custody going?
Could they possibly be wanting to buy real estate?
They could, but typically most times when you have a mutual fund, you're not buying property with it. Most times when you're because you got to keep in mind there's a separation between the assets under management can have private people that are more interested in maybe buying real estate, and that's maybe a possibility. Assets under custody, however, I don't think is possible.
So what are you proposing?
Well, there's only one place that you can put this money, and that's in government debt. Not only is it the only place you can put the money, but we're talking about, obviously, $209 trillion is well above even the U.S. national debt, which means
so you're suggesting
these U.S. banks,
that they are going to different nation states and supplying them with their yearly budget.
Right. And because they're bound in pension plans, right, they have full latitude. So, for example, the U.S. is going to want to access your pensions because that money is you're not actively managing it. So one guy at a custodial bank goes, yeah, we're going to loan out the U.S. government $2 trillion. And the U.S. government isn't concerned that suddenly those bonds are going to get called in tomorrow, because all that a pension plan has to do is pay out individuals that reach that age. Now, if you've put in $250,000 into your pension plan over your lifetime, right, and you die like the day after turning 65, that money doesn't go to like your kids or anything. Maybe you have life insurance, but that's a completely different policy, right? So that money, they have a lot of money of basically dead people's money or whatever else, where they have a complete latitude to shuffle this cash and capital around without any concern or risk that their debt will be called in. So we're essentially financing the debt that we also are obligated to pay with our taxes.
So just hypothetically, though, but if for some reason or other people end up dying off earlier and earlier, then that money goes back into their black hole. of revenue.
Well, yeah, this is it. So what happens is that basically it's kind of like purgatory, because basically you could say the bank will make this statement, right? This money in the custodial accounts is not ours. But on the flip side, it's not really the pension holders either. There's a lot of asterisks included in that. And so they're not really tabulating who owes what, because the whole idea of a pension plan is not that you get out what you put in. Some people get out more. Some people get out less. Some people die when they're 45 or 50, and anything that they put into the pension plan is just for the pool, right? And in that realm of obfuscation, of not really knowing the checks and balances, who owes what, and how many people hold this, and how many people put what into what pension plan, and they rebundle the pension plan, and then they'll sell it off to another bank. And because a lot of this money is coming from even Bank of America can bundle up your account and then just ship it off to another bank. So it's incredibly hard to track.
So I think what you're suggesting then is that the workforce of each nation are basically propping up their own financing of their own debt.
Well, yeah, it's kind of like the notion that people have that there's a separation between the state and the private, and in a sense, we're getting we're the only thing of value, basically. And so your labor is being skimmed off of on the private side, private pension plans and all this other stuff. Your taxes are being taken up by the government, and basically both sides are trying to skim you as much as they possibly can. There isn't really, the system isn't really being propped up as much by these private individual investors and everything. If you even take this, knowing that the assets under management is still made up of mutual funds and other things of what I would call dupe money, which is you. And but if you compare that to the assets under custody, which is definitely dupe money, like 100% it's dupe money. Warren Buffett doesn't have his assets under custody. He manages his assets himself, right? So none of the big billionaires that we know of, or the trillionaires that we don't know of, have their money in assets under custody. So you can almost guarantee that all of that money is like average people's money, right? And so that's 209 trillion. It's by far, it far exceeds, it's 5 times the amount of assets under management, right? So it's a huge amount. The collective group of working class Americans and abroad, because frankly, not to be besmirching, but there's no way that you have that amount of money in your pension plans just on your own. So it goes well beyond America. Europeans are putting money into private pension plans that are going to U.S. banks that are then being bundled up and then repackaged in public debt offerings.
Well, I think it's not just the private pension plans. I think even the federal pension that's taken out, I mean, where's it going? It's got to be ending up in these custodial banks.
Well, dude, I'm glad you brought that up, man, because no, it's not. Okay. If you've heard the term intragovernmental debt, it's what they use to say, oh, the state is at $37 trillion in debt, but don't worry, because some of that money is intragovernmental, so it's a debt that the government owes to itself, right? Well, if you're running a constant deficit, what is this intergovernmental debt? The individual state is bankrupt and in a deficit. The regional cities are in debt and in a deficit. The federal government is in debt and in a deficit. So who the fuck has the money, right? And the answer is public pensions. So intergovernmental debt, they're not really interested in advertising this with a big flag and sparklers. But the reality is that it's made up mostly of Social Security trust funds.
Somehow
which
it
means
seems
that,
like this is circular in nature, not linear.
So which means, and you can get kind of an idea of the amount because there's $7 trillion in this. $7 trillion of basically government employees. So your soldiers' pensions, right? This is the money.
Teachers.
So
firefighter,
I'm not
every
sure.
public servant, even police forces, they have huge amounts taken off in pension, I'm sure.
So keep this in mind now, because when you get some pinhead economists out there, 9 times out of 10, he's going to say,
well, the intergovernmental debt doesn't really matter because we owe it to ourselves, so we really don't have to pay that money back.
now keep in mind that money is your pension plan if you're a public employee. So what that pinhead is saying is that who gives a flying fuck about paying that money back, because that's pension money and they can pound sand.
I think here's the great divide between the managerial class and the working class. See, the working class are the surety to pay the debt. They're also the ones that are coming up with the capital to prop up these enormous asset management companies. But the managerial class, they're paid off to keep the proletariat working, which is also why, if you think, why would the West, which really doesn't have much of a manufacturing economy anymore, why would they want to still be increasing their workforce even though their workforce are paid a pittance? Well, it's because you get more guarantees, you get bigger loans, you can prop up, become bigger and bigger pillars of this whole system if you have the largest workforce that you can possibly muster.
Oh yeah. And okay, so here's another another perspective number. So according to whatever source, I don't know, I mean, who knows where these people come up with these numbers, but let's just say that this is accurate. And the global net wealth was estimated at $659 trillion in 2021 and is growing, blah, 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 blah. And personal wealth is $471 trillion. So to put that in perspective, in the custodial bank,
good, it looks like.
In the custodial banks, that's 1/3 of the total wealth on the planet is held up there. So if you think that the pension plans is just a small number, it's actually an incredibly large number. It's probably one of the largest concentrations of wealth. Yeah.
Yeah. So if 600 trillion is the estimated value of
the entire planet,
everything, then yeah, it's an easy 1/3.
Anyways, I think our battery is running out, and I think we've kind of covered most of everything. I mean, we'd just be kind of repeating ourselves. So I think on that happy note, I think we'll cut it there.
Have a good Monday.
Have a good Monday, everyone. See you tomorrow.